See, there's been huge inflows into ETFs this year, and especially in May. One sector continuing with record inflows, ESG. Another record quarter, another record month, and they're headed for another record year. Joining us to discuss is the man who runs the biggest ETF family in the world and the biggest ESG suite of products. He's Armando Senre. He's the head of BlackRock's iShares Americas. Armando, you launched your newest ESG fund, Carbon Transition Readiness ETF, for companies with a preference for lower carbon emissions. You just did that 2 weeks ago. You've already got $1.3 billion in assets. Has climate change now become the wheel that is steering the ESG ship? What's motivating ESG inflows?
Yes. Hi, Bob. Great to be here. Like you said, I think that, first of all, I would say that for investors, climate is top of mind. As you know, it's a priority for BlackRock to build more products to allow investors to incorporate climate into their sustainable views in the portfolios. In the case of the low carbon transition suite of products, you mentioned LCTU. We actually launched two, LCTD, which is international, and LCTU, which is in the US, both of them close to $2 billion in assets, largest active ETF launch ever. And I think that the reason that product is exciting is because we work with, we partner with some of the most sophisticated investors in the world. I know you had Chris Elman from Castors a couple of weeks ago when we did the launch. They participated in this offering. And that's a way for investors to get exposure, in the case of LCTU, to the Russell 1000, but with 50% lower carbon emissions in the portfolio, in the overall portfolio. So very exciting product range. And like you said, we just crossed 100 billion in assets overall in sustainable ETFs at BlackRock, and one of the areas that we believe the category will grow to $1 trillion by 2030.
Yeah. I'm amazed that there is such a strong interest from a new class of investors that are driving interest in climate change, but I can't help but noticing the top holdings in the carbon fund, they're all mega cap tech names, which we see all the time in ESG funds. Apple, Microsoft, Alphabet, Amazon, Facebook. Those are the top holdings. Why do mega cap techs appear in so many ESG holdings? Is there a diversity problem in these top ESG funds?
Now, what I would say is that you have to look at sustainable is not the same for all investors. Different investors take a different approach to how they want to incorporate sustainable in their portfolios. So in the case of the low carbon transition portfolio that we talk about, LCTU, you're trying to get exposure to the Russell 1000. This portfolio is an active ETF. What we can do is we can overweight and underweight, but again, with a low tracking error, 100 basis points of tracking error, trying to give exposure to the Russell 1000. But at the same time, the overall portfolio has 50% lower carbon intensity than the Russell 1000. That is the objective. And what we try to do is we double down on education to, again, help investors understand the different groups of products that they can choose to incorporate in their portfolios.